This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Bounce back. Stocks start the week with a 300-point rally, even as trade remains a big unknown for the market.
Our country on trade has been ripped off by virtually every country in the world.
Not backing down, the president pushes his plan to impose steep tariffs on steel and aluminum, breaking with members of his own party and clouding negotiations to rework NAFTA.
Protect your retirement, a 401k checklist for a volatile market. Those stories and more tonight on Nightly Business Report for Monday, March 5th. Good evening, everyone, and welcome. And it was a rally to start the week. Stocks picked up steam midday as investors focused on the economy and a solid report on the U.S. services sector. Concerns over trade? Well, they may have eased just a bit today after House Speaker Paul Ryan urged the president to reconsider tariffs on steel and aluminum, and the head of the world's largest hedge fund called the threat of a trade war a political show. Whatever the reason, the major averages rose more than 1% on the session. The Dow Jones Industrials advanced 336 points to 24,874. NASDAQ up 72, and the S&P 500 gained 29.
Even though concerns over tariff eased a bit today, many market watchers consider it a big unknown. And that was evident during the negotiations to rework the North American Free Trade Agreement, or NAFTA. They were going on in Mexico City, and that is where Steve Leisman is for us tonight. Good evening, Steve.
Good evening, Sue. The fate of the North American Free Trade Agreement is really unclear after the conclusion of the 7th round of talks between Mexico, Canada, and the United States, occurring under the threat of those steel and aluminum tariffs proposed last Thursday by President Trump. In fact, the day began quite dramatically with President Trump tweeting a direct linkage between the NAFTA talks and the steel agreement and the steel tariffs, saying that one could be, if the Canadians and the Mexicans made an agreement with the United States, then those steel tariffs could come off. Now, at the press conference with the top trade representatives, Krista Freeland, the economics minister for Canada, had very strong words opposing those steel and aluminum tariffs.
As a key NORAD and NATO ally, and as the #1 customer of American steel, Canada would view any trade restrictions on Canadian steel and aluminum as absolutely unacceptable. Should restrictions be imposed on Canadian steel and aluminum products, Canada will take appropriate, responsive measures to defend our trade interests and our workers.
For his part, Robert Lighthizer, the U.S. Trade Representative, said the tariffs are an incentive to get things done, and they want things done. The United States wants things done quickly. He urged a quick resolution of the issues to get ahead of political elections in Mexico and the United States. Here's what he said.
Finally, the United States has midterm elections coming up in November. All of this complicates our work. I fear that the longer we proceed, the more political headwinds we will feel. Thus, in the U.S., we must resolve our outstanding issues soon to maintain the possibility of having this measure be considered by the current Congress.
Now, the actual agreement depends on what happens with these steel and aluminum tariffs. Guys, we just got word that ISI, the research group, put out a note saying they see the odds of NAFTA being redone or agreed to at just 65%. Tyler?
So what is next for NAFTA, Steve? Where do we stand?
Well, I think a lot's going to change this week when President Trump puts out the details of those proposals. You know, there's a lot of incentive now and motivation for him to exempt from the Republicans, exempt Canada and Mexico. He has so far stood fast against that trend that's out there. There's another meeting, the 8th round next month, and then I don't know. I don't think they've agreed to go beyond that 8th round right now. Robert Lighthizer is saying only 6 of 30 chapters have been agreed to so far.
Wow. Steve, thank you so much. Steve Leisman in Mexico
Pleasure.
City.
Well, tariffs could have an outsized impact on the oil industry. It is a very hot topic at the largest annual gathering of energy executives and officials. Jackie DeAngelis is in Houston for the CERA Week conference.
The energy industry is facing a new pressing issue: tariffs. President Trump's promise last week of imposing tariffs on imported steel and aluminum could raise costs for an industry that has scrambled to get them down since oil prices have dropped. But analysts say the fear may be worse than the reality.
We don't view it as much of an issue. It comes out to about 5 to 7% of a total pipeline build cost actually coming from the raw steel material. So even if we were to see cost inflation in terms of steel tariffs driving prices higher, it wouldn't be all that impactful for the pipeline operators.
Another consequence of tariffs on imported steel is the fact that U.S. producers are working on making the grade of steel needed for large-scale pipe projects. But the ramp-up may not be as fast to meet demand.
If it actually results in being able to source less of that steel from areas that can only produce the highest grade steel, that would be a bigger concern, where we can't actually build some of the large diameter pipes that are really underpinning a lot of the nation's infrastructure.
This morning, the International Energy Agency said the U.S. could be producing 17 million barrels of oil and gas per day in just 5 years. Domestic oil output has already surpassed Saudi Arabia and could soon surpass Russia.
The fundamentals are there, and if the prices remain at these levels, we expect the U.S. will cover about 60% of that oil demand growth alone in the next 5 years.
Other topics being discussed on the sidelines of the conference: deregulation and the impact of the Trump tax plan, all seen as positive for energy companies. But the question is, will that lead to overproduction, and could that put a cap on higher oil prices? For Nightly Business Report, I'm Jackie DeAngelis, Houston, Texas.
But the view of tariffs is vastly different in steel country. Take Timken Steel in Canton, Ohio, for example. That company is just one of many cheering the decision. Leslie Picker reports tonight from one of its plants.
After more than a century producing steel, Timken Steel, which makes a higher-end product, was in a state of crisis. As the energy and commodity prices tumbled in 2015 and 2016, they took Timken Steel and other producers down with them.
Back then, Timken Steel was running below 50% capacity. No longer profitable, the company was forced to reduce headcount by about 12%. These were employees making $72,000 a year on average. This new facility that we're standing in now remained idle for about a year.
That's when CEO Tim Timken started pleading with officials in Washington to do something. Timken, a fifth-generation leader of his namesake company, says that the steel industry would be better able to withstand downturns if trade was on a more level playing field. For years, the industry had complained of excess steel flooding the market from foreign producers. He says globally there's 700 million metric tons of oversupply, 425 million of that coming from China alone. Demand in the U.S. is only 94 million.
If we're given a level playing field, we can go to toe with anybody in the world. What I can't do is compete with foreign governments, and that is what we've been doing over the last number of years.
Last Wednesday night, around 7 p.m., Timken received a phone call from the White House, asking him and 6 of his peers to be in Washington the next morning. They all showed up for a meeting that lasted about 45 minutes. President Trump made it clear that it was important to look after the U.S. steel industry, Timken says. If the U.S. were to give up on steel, the country would be wholly dependent on foreign sources, which could threaten national security, according to industry leaders. The president announced that he would be imposing 25% tariffs on steel imports to protect the U.S. producers. The backdrop for steel has been improving more recently without the tariffs. Timken said he's not sure what the tariffs will mean for employment levels, capital investment, or steel prices. He's waiting for more details.
But most workers here are encouraged by the tariffs and what it means for their job security, especially after a few tough years. For Nightly Business Report, I'm Leslie Picker, Canton, Ohio.
The Chinese government set aggressive economic growth targets as part of the National People's Congress, but the outlook for the world's second largest economy did not grab headlines like it has historically. Instead, the focus was on tariffs. Eunice Yoon is in Beijing for us.
Fear Fears of a trade war overshadowed the National People's Congress. Ahead of the event, which sets policy for the year, the Congress's spokesperson responded to the U.S.'s trade tariffs, saying that China did not want to engage in a trade war, but that Beijing wouldn't sit by either and watch its interests get damaged. In addition to trade wars, economic targets were a major talking point. Premier Li Keqiang gave China's version of the State of the Union address, and in his work report, he revealed the country's GDP growth target unchanged at around 6.5%. Li stressed that the Chinese will continue to control financial risk, which has been a huge concern of investors. Economists were also focused on his comments that China would reduce the budget deficit from 3% to 2.6% of GDP. That implies that the government will scale back some of the stimulus which has been helping to support the economy. The premier said China would give tax cuts for corporations and individuals, an equivalent to roughly 1% of GDP. Some here have been concerned that the tax cuts in the U.S. could boost America's competitiveness versus China. The premier did not say anything directly about trade with the U.S., but he did say that the country would continue to reduce the capacity of steel and liberalize sectors such as manufacturing, telecoms, healthcare, education, and new energy vehicles. There were no specifics, though, so it's unclear if any of the changes will improve the climate for U.S. businesses. On the political front, the constitutional amendment to end term limits for the presidency was formally introduced to lawmakers today. The Congress will vote on that on March 11th, but it's all but certain that those changes will be approved, paving the way for President Xi Jinping to stay in power for much longer than his second term. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Time to take a look at some of today's upgrades and downgrades. Valiant's rating was upgraded to buy from hold at Deutsche Bank. The firm says Valiant is doing right things to strengthen its business. The price target now $20. Shares were up 3.5% to $15.40. And General Electric's outperform rating was reiterated at William Blair. The analyst there cites last week's announcement of 3 new directors and says GE's aviation and healthcare businesses performing better than expected so far this year. The firm says the stock could climb to $20 to $22 a share, and GE was up 2% on the session to $14.42.
Morgan Stanley is upgrading Groupon to equal weight from underweight. The analyst calls the recent stock sell-off following its mixed quarterly results overdone. The price target is raised to $4.40. The share is closed just above that level at $4.49. Monster Beverages rating was raised to buy from hold at Deutsche Bank. The analyst there is encouraged by the energy drink maker's innovation pipeline. Price target is $63. The shares were up nearly 3% to $55.74.
And still ahead, some heavy hitters are helping kids learn the fundamentals of finance. Amazon is reportedly in talks to create checking account type products. According to the Wall Street Journal, the process is in its early stages, and the product would be aimed at younger customers and those without bank accounts. Details few, but the report states that the online retailer is not planning on becoming a bank.
Well, one account that many investors appear to be watching and changing is their 401k. The volatility in the stock market is putting quite a few of us on edge. Sharon Epperson joins us to calm us down and some new numbers on how savers are reacting. It's great to see you, Sharon, as always.
Good to be here.
So what are they doing? What are all these investors doing in response to the volatility?
401k investors, they're moving their money around. We're looking at some data now that it's just come up from Alight Solutions, and they're a record keeper of 401k plans. If you look at February 5th, we remember that day when the S&P 500 was down 4%, we saw 12 times the average daily trading activity in 401k, 12 times higher than normal. And then just last week, when we saw another market dip, we saw double the average on Wednesday. So what 401k investors are doing right now is that they're moving their money around, and this is retirement money.
Is this smart to do?
It's not smart to do. They're doing exactly what financial advisors say don't do. They seem to be panicking. And their biggest threat to their 401k may be themselves. They need to figure out a way to protect themselves from making these knee-jerk reactions.
So what should they do? I mean, do you do nothing? Do you...
you sit there and you assess your risk. You look at what your goals are and you try to think, can I sleep at night? And if you can't, then probably your mix may be too aggressive in terms of the funds that you're in your 401k. You also want to consider whether or not your company has something called auto rebalancing. So you pick the mix that you want of your investments, and it will automatically readjust whenever the market changes to make sure that you keep that mix. So if you check that box, you're going to be in good shape. And a managed account where you pay a small fee for a professional to just take care of it for you, that is an option in many 401k plans. So it may be something you want to consider.
Absolutely.
Yeah.
Sharon, as always, thank you.
My pleasure.
Sharon Epperson.
Nice to see you. All right, small cap Dermira pulls the plug on its experimental acne treatment, and shares head south. That is where we begin tonight's market focus. The biotech said it was discontinuing plans to develop the medication for treating moderate to severe acne after it wasn't any more effective than the placebo. That's not what a drug company wants to hear. During studies, the news came as a surprise to analysts and investors. Dermira previously reported 2 successful trials with the treatment. Dermira shares plunged, and I do mean plunged. Look at that, 66%. Finishing the day at $8.59. Walmart pushing deeper into the meal kit space. The nation's largest retailer, which currently sells dinner kits through its online grocery service and in about 200 stores, said it wants to make the offerings available in 2,000 locations this year. Unlike other meal kit companies, Walmart said customers will not be required to purchase a subscription. Walmart shares finished up 1% at $89.98. Meanwhile, shares of meal kit delivery service Blue Apron fell 5% to $260. And the hedge fund Starboard Value said it has nominated 2 more directors to the board at Newell Brands, bringing its total count there to 12 as the activist investor continues to pursue management changes at the consumer products maker. Just 2 weeks ago, Newell Brands, which makes Sharpie markers and Rubbermaid containers, increased its board size in an effort to ward off Starboard's efforts. Shares of Newell up 5% to $28.09.
The French insurance giant AXA is expanding its global reach in its deal to buy XL Group for more than $15 billion. AXA said the merger strengthens its position in the commercial property and casualty insurance market and presents opportunities for growth. Shares of XL Group popped 29% to finish the day at $55.92. And Nordstrom rejected a takeover offer from the Nordstrom founding family, saying that proposal undervalues the retailer. The family, which owns more than 30% of the company, offered $50 a share for the parts of Nordstrom it doesn't already own. The shares initially fell in after hours and ended the regular day down 2% to $51.90.
A new program teaching inner-city kids how to invest in real estate drew some heavy hitters to Yankee Stadium yesterday, and Diana Olick was among them.
These kids from the Bronx are not heading into a baseball game.
Thanks for coming, guys. We're so excited to have you.
They're taking a step toward a brighter future, part of a program called Project Destined, designed to teach teens the fundamentals of finance, specifically investing in real estate.
We begin to sort of help them understand you can actually make money from real estate and have a good life from real estate.
It's the brainchild of former Carlyle Group executive Cedric Bobo, who launched it barely 2 years ago in Detroit and then brought on former Yankee legend Alex Rodriguez, who now runs his own real estate development firm. He brought it to the Bronx.
I was born right down the street in Washington Heights, and I've always loved baseball and I love business. And real estate is a way out of the hood.
The kids attended seminars learning how to value and finance apartment buildings.
We had to talk to a lawyer, we had to talk to a banker, and we also had to talk to a broker. 1-bedroom apartment, 4 2-bedroom apartments, and 1 3-bedroom apartment.
Then they pitched purchase offers for 2 buildings, Shark Tank style, to a panel of experts in the Yankee boardroom, including fellow Bronx native Jennifer Lopez.
To be able to teach this to kids who are not going to maybe have the Harvard education or don't have that opportunity is, to me, a beautiful thing. Because it's not just about kind of your life, it's about owning your life. It's just not about owning a property. It's about learning how to manage everything about your life.
Holding the final competition at Yankee Stadium, one of New York's most iconic pieces of real estate, not only draws the kids in, but makes for an exciting event. But what's more important to the founders here is not just that the kids take a swing at real estate,
but that they follow through.
We give 20% of our profits to a 501c3 that issues scholarships. So every quarter, we're issuing you a scholarship if you continue to be engaged. And engagement is both in our classroom, but also online.
I never knew that for a young kid like me, I'll be able to invest in something so real that is actually on the market, to now being presented in front of like millionaires.
The program now has major partners, including Viacom, MasterCard, and Blackstone's president and COO, Jonathan Gray.
I think this works pretty much anywhere. What you need, obviously, is some people on the ground, some people in the community, the business community, local real estate people who say, I want to take some time, I want to try to educate some kids and give them some opportunity.
The opportunity to turn a little learning into a foundation to build on. For Nightly Business Report, I'm Diana Olick in the Bronx.
And that is pretty cool. You can learn more about this program on our website, nbr.com.
Coming up, why cannabis and casinos do not mix. Martin Shkreli has been ordered to forfeit more than $7 million in assets. The former drug company executive was convicted of defrauding investors. He is scheduled to be sentenced for securities fraud Friday. Some of the assets Shkreli could give up include a Picasso painting and an album by Wu-Tang Clan.
Recreational and medicinal marijuana are legal in Nevada, and sales are strong. But casinos don't want anything to do with the fast-growing business. Jane Wells has the story from Sin City.
It's the biggest economic boon to Vegas since gambling, marijuana. In the first 6 months, recreational pot was legal in Nevada. Sales hit close to $200 million. But the gaming industry insists cannabis and casinos don't mix, something Isaac Dietrich learned the hard way.
So I was gambling with a couple of friends playing blackjack, and a security guard came over and asked to escort me off the floor.
Dietrich is CEO of Mass Roots, a marijuana news and review website that doesn't even handle actual pot. But when he listed his business in an application for a loyalty card at the Wynn, he was not only turned down, but banned for life.
We asked to be treated the same as every other business.
But marijuana is not like every other business because it remains illegal in the eyes of the federal government. Casinos have to abide by federal law or they could lose their licenses.
The casinos have to be extra vigilant against money laundering if it involves money that is legal in the eyes of the state. One CEO of a very successful pot enterprise told me off camera that since no bank will take his cash, he brings it to Vegas. He goes to the casino, turns it into chips, gambles with a little of it, then eventually cashes those chips in for a check that he can deposit into the bank account. No one knows how much of that is going on or exactly how to stop it.
I think the operative term is reasonableness. They have to conduct reasonable due diligence to follow up on any suspicions that they might have.
There isn't a organized effort by the cannabis industry to go to a casino and do that.
Governor Brian Sandoval led a gaming regulatory panel which decided new rules about how to handle pot.
And this is a hard one.
A panel that includes MGM Resorts CEO Jim Murren.
I think it provides teeth to a difficult issue, but also understands the fluid nature of conflicting laws between the United States and Nevada.
The panel decided casinos could not be in any sort of business relationship with marijuana enterprises, except they could continue to allow pot conventions on their properties.
This is simply a networking opportunity for those that provide services affiliated with the industries, for instance, the grow facilities and what best practices in that regard. They do not include consumption.
It remains a sticky situation. Talk pot on the convention floor, but keep pot money out of the casino, as Sin City works to keep its sins separate. For Nightly Business Report, I'm Jane Wells in Las Vegas.
And before we go, here's another look at the rally on Wall Street. The Dow advanced 336 points. The Nasdaq was up 72 and the S&P 500 gained 29. And that does it for Nightly Business Report for tonight. I'm Sue Herrera. You know, it's been 5 years since CNBC began producing the broadcast, so we thank you very much for your continued support and viewership.
We do indeed. Man, it's gone by fast.
And we're not any older.
I'm Tyler Mathisen. We also want to remind you, it's not just 5 years, it is the time of year that your public TV station asks for your support. We'll see you tomorrow.